In this presentation, we will continue on with our comprehensive problem related to a not-for-profit organization. In prior presentations, we entered the transactions for a time period. We then had the allocation of the expenses to the category for them. Then we went through the closing entries. Now we're going to take a look at the statement of financial position, which is going to be similar to the balance sheet. So we're considering the balance sheet. We're going to scroll back up top. We're going to be in cell T33. Now, as we do this, remember it's there's a couple different trial balances that we have created here. So you'll recall that we started up creating the trial balance on column, or let's say row 1 in column O. Then we took those balances, those ending balances, and we allocated them down to the second trial balance so that we can have the breakout between the expenses down here that are now allocated by category and the expenses up top, which were allocated by the normal, basically, expense category that we would typically see. So we could see both the detail in that format. Then we did another same process down here so that we had another trial balance so that we can do the closing entry process, which is necessary for the balance sheet because we need to see the net assets, the portion that's going to be broken out for the restricted versus the without restriction on the net assets, which is going to be kind of like similar to the equity section of what would be similar to the balance sheet, the statement of financial position, which we are working on here. So keeping that in mind, we're going to be working with, when we create the financial statements, typically the middle item, because this middle trial balance is the one that is not yet closed. Therefore, we have the detail what would be similar to the income statement accounts. However, here we are going to be focusing in on the balance sheet type of accounts up top. So just remember, if you get mixed up, we're in the middle. We're typically working in this middle item, the middle trial balance, although we will jump around, and when we do so, from time to time, not often, but from time to time, and when we do so, I'll let you know. All right, so we're going to start off just like we would in cell T34 in the same format that we typically do, and we're going to start off with assets. And also note that if you think about other types of ways of learning how to create the financial statements, we'll often start with the income statement type of account, the statement of activities in this case first. I like to start with the balance sheet because I think it just allows us to go from top to bottom. So just remember the argument for each method. I like to go from top to bottom. I think the balance sheet is kind of everything. I like to see something in balance and then go from there because I think it gives us a good base starting point. The argument for the income statement is that you have to do the income statement so that you get those income statement numbers that you can then use for the balance sheet. And with the nonprofit organization, there's a bit more truth to that because we can't as easily get just the bottom line net income number because we have to break it out between the net assets with and without restrictions. However, I still think even if in our case we'll be able to do it because we have already broken that information out in the closing entries. And even if you didn't have that information, I would still rather go from top to bottom, put the net assets in as one lump sum number that you plan on going back and breaking out once you do that breakout process. I still think it's better to work with something that's in balance, So that's my argument for doing the balance sheet first, but either way will work. Typical assets we're going to be adding, of course, starting with cash. So cash is going to be up top. And then we're going to have the contributions receivable. So let's pick this up, cash. Notice the indentation. So we're going to indent cash. It should be formatted for you already. I'll pick up the number for cash in U35 by saying equals, pointing to that 9597 540. Then we're going to pick up the contribution. So we're going to say this is going to be equal to the contributions receivable, kind of like accounts receivable. Now this one, we're going to record it in essence net. And we might even want to say that. I'm going to copy this and paste it 1, 2, 3 so that I can add that we're going to make it net. Because you'll recall that we have these two accounts that are in essence related to it. The one we typically know of, which is the allowance for uncollectible pledges, like allowance for doubtful accounts. And then we have the discount for that item that's going to be pledged sometime far out into the future. We have this discounted amount. Therefore, the 217,100 minus the 21,600 minus the 12,940 gives us the net amount, which we will record at 182,560. So I'm going to do the sum function to do that, equals the sum of this plus this plus this, summing those. These will be subtracted out because these are negative numbers within the formula. So enter, and there we have that. Then we have the equipment, furniture and equipment. And once again, we're going to record this net of the similar to accumulated depreciation, the allowance for depreciation. So we'll copy that, paste it 1, 2, 3 up top. And then once again, I'm going to say this equals the sum of, and then we've got the furniture and equipment and the allowance. So we're going to say both of those items, and there we have it. And then that's going to give us the total assets. So then we're going to say that's total assets equals the sum of these three accounts. So that's the 300,200. Now, if we want to check that, of course, we can highlight the green accounts up top, and it should be the same. Note, of course, this only works when we have the nice formatting of debits being positive, credits being negative. Otherwise, you'd have to say, you know, this plus this, minus this plus this, minus that. So it really is helpful to have this kind of format. Then we'll have liabilities. Liabilities is the next item. We're going to have accounts payable. The orange items are where we are at now. Accounts payable. And you might want to, sometimes I highlight as we go and say, we found a home for all of these now. And once we find a home for everything, we should be in balance and everything should be good. Now, I'm going to put this is a credit over here. We don't want debits and credits on this side. I'm going to flip the sign, therefore, by in U40 saying negative of that number. Negative of that number. And then, of course, we'll pick up the next one, which is going to be the salaries payable. And I'm going to say negative of the 16,800. And that'll give us our total liabilities. So the total liabilities, therefore, is going to be equal to the sum of those two numbers. Okay, so then next we're going to have the net assets, which is similar to the equity section. So the net assets are going to be these two items, right? We've got the net assets with donor restrictions, and we don't need the whole name. So we're going to say with and without donor restrictions. Let's pick up those. And then that'll give us the total. Now I'm going to put the total in now and just show you what we can do with this last part. This is the most confusing part because you'll recall that the equity section on the balance sheet, of course, is all of this because we're going to close out the income statement accounts to the equity. Therefore, all of this should be, in essence, equity. So the bottom line number should be 278,900. Well, if I don't know the breakout between these two yet, I could just pick up that total number. I could say, hey, I need to go back and kind of figure out what the breakout is going to be and make that yellow and say, but I know that the total is going to be the negative sum of all of this, all the blue. So if all equity or net assets were as one, that would be that number. And then we can double check if we are in balance to see that, see if assets equal liabilities plus the net assets, which is similar to equity, by summing up this outer column. And there we have it. So the 302 is equal to the 302. So that looks good. We just don't have the breakout. So again, to me, it would make sense to do the statement of financial position, even if you don't know the breakout and you want to figure that out as you create, similar to the income statement type of account, because at least you'd have something that you know is in balance now. Now, you found a home, in essence, for everything. However, the income statement you kind of grouped all together. We want more detail on the income statement type numbers. So we're going to have to go back through and, of course, make the income statement type numbers, which is the statement of activities. Now, we already know also these two numbers. We know what those are because we did the closing entry already. So if we go down to the closing entries, here's our breakout. Here's the net assets without donor restrictions, net assets with donor restrictions. So we could actually pick these numbers up right now if we so choose. And let's go ahead and do that. We're going to say, so this is where we're going to jump to the other trial balance, the closing trial balance, the post-closing trial balance. So I'm in U44. This is without donor restrictions. I'm going to say negative, scrolling down, and we're going to pick up that 44,244. And then we're going to pick up the with donor restrictions in U45, negative, scrolling down and picking up that 234,656. And there we have that. These two then add up to that 278,900, 278,900. So I'll go ahead and make that blue. So there we have that. So now we've got, in essence, the balance sheet, the statement of financial position. And now next time we're going to go to the statement of activities.